Start webinar. And I believe we are now live in the webinar as well. So yes, we are. We've got lots of participants joining in. So welcome everyone to ONREIA Online. I'm just going to drop over the hosting honors to Corey McKinnon. Change host. There we go. All right. So we have, let's see here, 60. Okay, we're filling up fast. 70. 780. All right. So welcome everyone to ONREIA. We're going to give it a couple minutes to allow everyone to join us. As you're coming in, I'm curious to know where you are joining us from. So if you could, there's two sections that you'll see at the bottom of your screen. If you're joining us on Zoom, you'll see the Q&A section and you'll see the chat section. So put where you're joining us from down in the chat. And if you are joining us on Facebook, then put in the comments. Let us know where you're coming from. Oh, good. Seeing lots of people joining. Fantastic. Welcome, everyone. Looks like lots of spots all over Southwestern Ontario. I wonder where the furthest one away will be from. I have an idea.
From us or from Canada?
Well, we do have some neighbors that are down here. For those of you who are wondering why Shawn and I are in short sleeves, and you might be able to see in the background here, we are down in Costa Rica right now. We have moved down here for a little while, and that is where we are joining you guys from. Maybe panelists, can you let us know where you're joining us from?
Sarnia, Ontario.
Awesome.
I'm in Naples, Florida right now.
Nice.
Nice. And normally you're out of where, Andrew?
Burlington, Ontario.
Burlington, that's right. And Rasna, where are you?
I'm in Ottawa.
Ottawa.
It's cold.
Where it's cold. Yeah, we are not sad to be out of the freezing cold weather.
No.
Bad Canadians over here, but
We'll take the pain for you.
Thank you.
Awesome. Well, we'll give it just a couple more minutes for people to join. I should probably put on my glasses here just for a quick sec. Oh, it looks like Zoom is allowing more than 100 people to join, so that's great. Hopefully, if I'm just going to pull up ONREIA, or sorry, our ONREIA Facebook page, and just make sure that I can see people there so that we can see those comments coming in. So first of all, again, if you're just joining us, welcome to ONREIA Online. We're really excited. This is our first event of 2021. Yep. And if you missed it a couple minutes ago, I asked if you're just joining us to put in the chat, let us know where you're joining us from. Tonight, we have an excellent lineup and some fantastic topics to go over. So I hope you're excited. I hope you have a notebook and a pen. And if you have anything else open on your computer, do yourself a favor and close it now. Close all those tabs that are going to cause you any distraction, because we want you to be fully engaged so you can get the most out of this evening. All right. Now, we had over 300 people register for tonight's event, which we're super excited about. And that being said, I know a lot of you guys are brand new and you might never have heard of us or ONREIA. You might not be sure who we are. So ONREIA stands for the Ontario Real Estate Investors Association. Shawn and I created that group about 3 years ago now. And we did it because we're real estate investors. We have been since about 2005. And we wanted to be able to network with other investors and learn from other investors who were actually active in the field doing the things that we wanted to do. You know, we didn't want to hear from people who were standing on, you know, the stages and telling us, you know, we think you should do, or people from the US. We wanted someone local, someone who has walked this path before us and could give us some just honest advice and education. So we decided to create something like that in our hometown, which is just outside of Woodstock, Ontario. So we began ONREIA in London. And there's really kind of 3 pillars to ONREIA. It's important for us to mention it so you get a good idea of who we are and what we're about. And the first pillar is, we really want to work to connect people. This being an entrepreneur, getting into the real estate investing space, especially if your friends and family don't really understand what it is you want to get into or what you're doing, you can feel like you're on a bit of an island. If anyone can relate to that, put something in the chat. I hear it from so many people. So we wanted a community, a sort of an area where you can connect with people who are just like you, trying to build a business in real estate investing. So that's one of the reasons. And now it's a little different that we're on Zoom, a little harder to do that. And when we were in London, we would have networking breaks. But what I would suggest for you to do tonight is take a look. We already have a ton of people in the chat that are telling people, telling everyone where they're from. Keep note of who's speaking up and speak up yourself. Stay active in the chat, make comments, and maybe write down some names of people that you'd like to connect with. Social media is a really handy tool. Let's make the most of it. And, take note of who these people are and maybe send them a friend request. Send them a message and say, hey, I saw you were on ONREIA. Just looking to broaden my network. Would love to connect. You don't have to be creepy about it. Everyone's here to do the same thing. So this is some way that we can sort of keep that connecting happening without actually being in person. Another pillar of ONREIA is educating. And, we always bring in successful local investors, investors that we've actually connected with and we know who they are. We know that they're legit and they are specialists in their particular niche of investing. So we want to bring education to all levels of investors. And you'll see, let me just see here real quick. I made a quick note of what type of people we have on our call tonight. Out of everyone who registered, 70 people were absolutely brand new. You haven't gotten started in real estate investing yet. You're just kind of digging in, which is amazing. Glad to have you here. Just over 80 are new investors. You might have one property, but you still feel pretty new. 96 of you are intermediate investors, and 30 some odd of you are advanced doing this full time. So you can see, oh, nice, Corey. You can see this runs the gamut. It's not just for people who are brand new and not just for those who are super advanced. It's really for everybody. So I hope you will, like I said before, get out your notebook, jot down all that good stuff, because this is an opportunity for you to learn. Third pillar, connected to learning, is taking action. And this is a really important one for us because we don't just want to be another webinar that you go on or, another thing you sign up for and you sit through it and think, oh, that sounds awesome. And then you do nothing with it. So we really encourage you to take a look at, what it is you've learned tonight and move with it. Okay, take action, do something that's going to move the needle so that next month when you join us at ONREIA, you can say, okay, I took what I learned, I applied it, let's move on to the next step. Okay, because if you keep doing nothing, you're not going to get any results. And we want to see you get results. That being said, I want to tell you a little bit more about who we are before we move into our first speaker. And this is Shawn Allen. My name is Jen. This is my husband.
Hey, everybody.
Clearly, I'm the talker between the two of us.
And I'm the eye candy.
So to give you some idea of who we are as people, Shawn, why don't you kind of give people a little bit about your background, what who you were before you were an investor, and what you focus on, what you started with, and what you're doing now.
Yep. So previously in my, before real estate life, I worked for Toyota. I was in human resources for about 15 of the 18 years that I worked at Toyota. So I was there quite a long time and kind of, was sort of feeling the golden handcuffs and not very autonomous. And, I was looking for something a little bit more to give me some financial freedom, some time autonomy, and, just different life choices so that I could be sort of free of the 9 to 5, so to speak. So we started investing in real estate. It really just kind of like very slowly buying hold properties, and then started getting into flips. I mean, I'm condensing my time frame here quickly to sort of fill it in, but For the most part, I guess my career has been, I've been kind of known as someone who does a lot of flips. A couple years ago, we did up to 30 flips. Slowing down a little bit right now because we're focusing on different things like development and larger multifamily buys, but still doing a large number of flips, wholesales. And really, we've kind of ran the gamut of all the different, sort of avenues and different ways that we can, get into real estate investing, lending, development, buy and holds, you name it, we've done it, flipping, wholesaling. And really, what it comes down to is I think there's so many different ways that people can get into it. And there's so many different, sort of avenues for different personalities and for different things to do. So there's really no excuse not to take action if you want to get in. And like Jenn said, I think, for me, that's the biggest thing when I talk to people or when people ask me questions about what to do and how to do it. And it really comes down to execution and taking action. So I think that's the biggest sort of, takeaway when we talk about our pillars. And just sort of going back to ONREIA and why we started it, I mean, we really wanted to have a like-minded community of people who supported each other instead of, saying that, it can't be done and you shouldn't be doing this and you should stay at your job and all the other, well-founded sort of things that people tell you. But if you're really interested in real estate, this is the community that we hope that you come to sort of get some feedback and get some people to get behind you and help you out. And there's lots of people in this group that will certainly do that. If you reach out to them, they'll give you some advice, they'll help you out, and they'll give you some information. Hopefully we can get back to, sort of the pre-COVID meeting in person in London. Our monthly meetups were awesome. We had a ton of people come out and, again, it was about education. And we had people come in and tell us about, what they're experts in and sort of share their information and their experience. But we also had tons of time to mingle and to network in person, which, it's invaluable. And I hope we can get back to that. But for now, this is a huge opportunity for us to reach out to a bunch of different people that might not have come on location in London. So, thank you all for being here tonight. Glad you're joining us. So hopefully you stay with us. We meet every month. And Jenn will talk about our next meeting later on tonight, but hopefully you keep coming back and find value here.
Awesome. Oh, okay. So we just got a message that our internet is a little unstable. So hopefully we don't drop out here. But we wanted to sort of give you that snapshot of who we are as people, who we are as investors. And there's a party going on next door. We're going to meet ourselves real quick and we're going to move in to Andrew Hines' sort of section of the evening. So before we move on to Andrew, I want to give you a little bit more about who he is. And sorry, I'm going to look this way because I can't pull it up on this computer. So Andrew, to give you guys some background, Andrew Hines is a business and economics educated real estate investor and an entrepreneur, as well as the host of the Andrew Hines Real Estate Investing podcast. And guys, if you haven't looked at that podcast yet, make a note to do so because he has tons of valuable interviews and stuff all on his podcast. So make sure you go do that. He owns his own construction company and has built dozens of new construction units and houses. And tonight he's going to share how his approach to investing has changed, if at all, over the past year, and sort of give some insight as to what we should be mindful of as investors, given the current economic situation and maybe what we might be seeing down the road. So with that, I'm going to hand it over to Andrew.
Thanks, Jenn. Thanks, Shawn. You guys hear me okay?
Yep, great.
Okay, perfect. Okay, so those who follow my podcast know I'm not one for a lot of the monologues. So we're going to do a little bit of a brief presentation here. I'll go ahead and share my screen, and then we'll just kind of open it up to Q&A and go from there. So I actually can't share. It says host disabled my screen sharing. So if Corey, if you can make that, I don't know, make that change here. Still says no. Okay, let's try this again. Okay, we got that. So let's get.
I made you the host there, Andrew, so you should be able to do what you need to do.
All right, perfect. Okay, can you see the slide here on my screen now?
Yes, sir.
Perfect. Okay, thank you for that. I will send it back once I'm done here. Okay, so Jenn, thanks for the introduction. Just a little bit about kind of what this presentation is. I'm not here to give advice. That's not really what this is about. This is more about getting everyone thinking, because there's a lot going on. I think the number one question people have is, where should I invest? Sarah Larby started a podcast with that title. I think that's a common question people have. And then beyond that, you want to know what should I be looking for? What makes a good market? What doesn't? And those aren't easy answers, but my hope is that if we can start asking the right questions, we'll get there, and we'll make better decisions because of it. So what I'm going to cover tonight is what I see happening. A big thing from an economic standpoint is just the money printing. Our government's been spending like crazy. So we're going to dig into that, what we know and what we don't know, and what we can do about it, how I've changed my approach, and I'll share a couple of resources, and then we'll just open it up for Q&A. So I'll try and make this pretty quick, and then that way I can leave time for lots of questions at the end. So economic outlook. Well, for one thing, we're down 5%. That's the early estimates from 2020. And this means that all goods and services sold in Canada last year actually contracted, despite the fact that our government spent half of our typical GDP just with government spending and giving money to the people. So what that tells me is that a lot of people actually didn't have that hard of a year. Yes, small businesses were absolutely devastated, but a lot of other people were largely unaffected, save for the service industry. So I think a lot of people are saving, and that's one of the big takeaways I take from that. But I also noticed that a lot of money seems to be landing in real estate now. There's a number of reasons why real estate was up so much this year, but across Canada as of November, and I didn't check the December stat, but as of November, it was up 17% year over year across Canada. So that's absolutely insane. I think that's without precedent and largely driven by low interest rates. But I think there's more to it than that. We've been seeing a housing crisis in the making for several years now. And we can touch more on that and how we can, adjust our strategy knowing that that's here. Because I don't love that type of situation. I don't like a crazy market. I like a stable market that grows steadily. So that's, the current situation isn't my favorite. So anyway, so let's dig into a couple of things that we know here. The GDP. So if you might have heard this, and I'm going to keep this really simple, guys, like, the thing I love about economics is it's something that, when broken down properly, is common sense. And I'm going to try my best to break it down. If I stumble here, we'll certainly dig back into it. You'll have a chance to ask questions. But so GDP, gross domestic product, that's something you might have heard thrown around. That's just every good and service sold in an economy in a year. So Canada's GDP is typically around $1 trillion. As of 2020, we had less goods and services. A lot of restaurants weren't operating. I think we can all agree that makes a lot of sense, that we would have had less goods and services because a lot of people just weren't allowed to sell. But we had more money in circulation. This is that government deficit. So estimates are around $450 to $500 billion was our government's deficit. That's not normal. The year before, we had a $17 billion deficit. So there is absolutely no precedent for the amount of money that's been spent and given to the Canadian people, and also spent inside of government. And that money's going to go somewhere. And the big thing to take away from this is more dollars chasing less goods means what? If you think supply and demand, if there's more dollars chasing the same or less amount of goods, we're naturally going to see the difference between those two be a price increase. So this is where I want to lead with this presentation is one of my main fears with the shutdown and what happened back in March, and we're almost at a year now, is when we start pumping money that doesn't belong into the economy like this, it's naturally going to push prices up through inflation, and we're going to want to be able to react to that. So a couple critical takeaways here is our dollar is a fiat currency, which means it's not backed by a commodity. Dollars used to be backed by gold and silver in the U.S. and in Canada. As of 1970, the U.S. took their dollar off the gold standard completely, and that was when hyperinflation, well, not hyperinflation, but they had severe inflation in the 1970s in the U.S. As soon as you unpeg to a commodity, now this is just paper. It's not actually backed by anything, and the reason we value it is because the government tells us to value it. So what I really want you to take away from this section is that inflation is actually a tax on your buying power, because you don't really necessarily see it, but when you have inflation happening, it's just going to mean that now instead of buying a bar of soap in the grocery store for $2, maybe now it's $2.30 next year. And if all of your goods take that kind of an increase, but you don't get that same increase in your living wage through your job, now we're going to have a problem, and we're going to start to see more Canadians in the lower and middle class start to struggle more. And this is one of the big reasons why I never really understood our government's approach here, because it's almost like they ignored that this would happen. When they take this, the measures that they have, they ignored that this was going to happen. And it's largely going to hurt the people that don't understand what's happening to their buying power. So the long-term effects of this spending. Well, one thing that particularly concerns me is we start with $500 billion, but what happens with our banking system is say I had a bank, the Bank of Andrew, I could take a $100 deposit if Corey wanted to lend me $100, and I could actually, without telling Corey, I could take that $100 and I could lend out 90 of it for interest and earn income off of that. So what happens is that money is going to circulate in the economy, and then it's going to come back to me. Somebody spends, somebody else spends, and eventually the money gets deposited back into the bank. Now I have $90 back. Well, now I can take that money and I can lend out 90% of that. So I can lend out $81 and so on. This is called fractional reserve lending. And typically the reserve rate is 10%. So you can lend out 90% of all your deposits as a bank in Canada. Well, that means that $100 is ultimately going to turn into $1,000 in the economy over time. And again, now we have more and more dollars that don't belong in our economy that are chasing the same or less amount of goods. And that is just a simple recipe for inflation. The question is really going to come down to how much. So a couple of things that I think are going to happen. I mean, I think that we're going to see interest rates stay low, at least for the time being. And this majorly is because our government keeps defending their spending because interest rates are low. Well, it's okay, we can afford it, interest rates are low. Well, that all works as long as they stay low. But if they were to change, I mean, of course, we don't have a crystal ball, we don't know anything for sure. But if they were to change, that would put a massive burden on both our government and on the citizens that have been put more into debt this year, especially our small business owners. But one of the problems with this is interest rates are typically used to control our inflation. So when inflation gets too high, the government will typically increase interest rates, and that'll bring the inflation rate back down, and they keep it in a nice balance. They typically shoot for it to be between 1% and 3%. Well, once you agree that you're going to leave inflation where it is, now how do you control interest rates? Now how do you control inflation? That's going to become a challenge. So our normal levers, things that the government can do. So they have these levers they can kind of pull on to control inflation. So the big one is interest rates. Another one is regulation. They can try and slow the economy down by over-regulating, or they can throw a whole bunch of extra taxes on certain industries to try and slow our economy down. I think a lot of us are expecting tax hikes after what's happened, but that's not the ideal way of controlling our inflation issue. So a couple of things that I think are possible. I think that a prolonged recession is possible, and this is not to be doom and gloom. This is simply to get you thinking, and then we can start thinking about solutions, how we can hedge, how we can position ourselves best so that we can put ourselves in a favorable position going forward. So something called stagflation is possible, and that's basically just when you basically have a whole bunch of inflation, but your economy is actually contracting. And I would argue that that's something that we've already seen, and we're probably going to continue to see. That's not a good thing. And ultimately, that could lead to a complete loss in faith in our dollar, right? Because how do you stimulate an economy that's not growing? Typically, the government would lower interest rates to stimulate the economy. But if we already have rampant inflation and near zero interest rates, what do we do now to stimulate our economy? So these are just some things to be aware of. And if any of that was over your head, again, we have Q&A, and this is being recorded, so you'll be able to come back and watch this again and give it another listen. Okay, so what we don't know, like I said, we don't know how much inflation, we don't know how severe it's going to be, when it's really going to take off. I mean, I think even if you went to the grocery store and you noticed this year, things got a little bit more expensive than last year. I'm always paying attention. I pay attention to when that bar of soap goes up, and what we're paying for a case of water. And I have seen changes in these products, and I think that a lot of you listening will probably relate to that too. And you can let me know in the chat if you've noticed that as well. So we won't know exactly what's going to happen to our assets either. Now, I want to point out here that if we own a home, that's a real asset. The government can't inflate away the value of our asset. And in fact, what's more likely to happen is our assets actually probably likely to go up in value because our dollar is becoming worth less. So it's going to take more and more of those dollars to buy the same asset. And I think that can explain some of the increase in our real estate that we're seeing. Certainly not going to explain all of it, but it definitely, I believe it can. Oh, guys, I'm just gonna switch this real quick. I lost my camera. I'll be right back. Okay, we're back. So that certainly can explain some of it. Now, regarding things like gold and silver, those are other real assets because they're commodity based. They're typically not going to lose their value. Again, the dollar used to be backed by gold. So gold and silver are typically known to hold their value. So in theory, we should actually see things like gold and silver go up a lot once inflation takes off. However, the market can manipulate the prices of gold and silver, so there's no guarantee there either. I do like those assets. I'll talk a little bit more about them, but there's no perfect solution, and I do just want to stress that. So we don't know what is going to happen in actuality. Is there going to come a point where real estate is just too expensive? So yes, the dollar's losing its buying power, but if people can't afford to buy, then values are going to plateau. So we have to consider this. It's not about me, being the Rain Man and just telling you exactly what's going to happen. It's about understanding the factors that contribute here and trying to make your best, most educated decision possible with the information that you have. Okay, so the perfect strategy, like I said, not there, doesn't exist. We don't know it. We simply have to make our most educated course of action. So what we can do, I would strongly encourage you to think about that which will always be needed. And I've spent a lot of time mulling this over in my own brain, thinking about what is it that's always going to be needed. And, a couple of things that come to mind right away are basic housing, food, and fresh water. And from there, we simply need to make some implications. Well, basic housing, I always call out Kellen. So Kellen, if you're here, and calling you out again, Kellen James Panicia, he's been on my podcast a couple of times. You can look him up. But he bought a whole bunch of housing that was in the most affordable price range in London. And he's seen a lot of his real estate portfolio over the last 5 years double in value. So buying stuff, under 200 grand, that is the most affordable, most basic form of housing in a lot of cases. And that's the one that's always going to be needed. So when things get tough and it's hard to afford housing, that in my mind is the most likely to go up in value first. And I especially think that in a time of, if we have an economic recession, one thing we know is people are always going to need a place to live. So, I love being in real estate. I think, that's why I invested in it from the beginning. So now I'm actually looking at more into getting into the basic housing. I think that that's a huge pro for going forward. Food, well, knowing that food's absolutely important, maybe buying farmland wouldn't be a bad idea. Land that can produce crops, buying extra acreage. We never know what the future might bring, especially if people lose faith in currencies. Maybe we want to grow some of our own food if it's getting too expensive to buy food from the grocery store. Again, this is just hedging against potential downsides in the future. Fresh water, maybe we want to have a house on a lake, or a house with really good wells or natural streams, things like that. Thinking about things that will store value and have value in the long run. So I already mentioned those things. Think about who might be least affected. So I'm also, on the other side of that coin is looking at markets where people aren't being affected as much. So this particular lockdown, what's happened in the last year, has mostly affected the service industry and mostly affected business owners. But people who were in white collar jobs and people who are extremely wealthy with a lot of assets really didn't feel the pinch like others, real estate investors as well. So maybe looking into markets that have a lot of people in that market that really largely weren't affected. I'm down in Naples, Florida right now. I would consider that one of those markets. I think that might serve as a hedge. Again, we don't know anything for sure, but it's certainly something to consider, that if there was a downturn to affect the rest of the country, it may less so affect this particular market. Okay, so I would say very, very important going forward to balance your cash needs and your hard asset needs. And what I mean by this is if you've ever heard the Ray Dalio quote that cash is trash, there's a reason for that. Again, cash is fiat. Cash isn't backed by anything, and it is going to lose its value over time. And but whereas like an ounce of gold, so I've heard this story thrown around so many times. Like back in like the 1930s, an ounce of gold could buy you a nice suit and a steak dinner. And still today, an ounce of gold can buy you a nice suit and a steak dinner. Whereas, you know, back in the 1930s, an ounce of gold was worth about $30, and now an ounce of gold is worth closer to $200 US. So, you know, while currency lost its value, the gold didn't. And that's not to say it can't be fluctuated and it can't be manipulated, but that's a hard asset, just like real estate, that theoretically should preserve value. So we want to balance how much cash we need to have to run our business with having an appropriate amount of cash to also, appropriate amount of hard assets as well, to protect our wealth. And that's really what those decisions are about. So any sort of commodity really could be a store of value. Grains, silos. I mean, I don't know anything about farming, but I know that commodities theoretically should, as long as they're not going to expire, hold their value. Of course, those things do. So you could look into other precious metals. And of course, like we said, real estate. And I'm sure other people have other ideas in here. One question to ask yourself is, what is my staying power? And I mean, what is your ability to weather the storm? And so if things get rough, say rents drop, a lot of people lose their jobs, is my property able to take a rent drop? You know, can I still cash flow if I have to lower rent by a couple $100s? What if I'm in premium rentals? What if the market for premium rentals dries up? Am I able to take that deduction? Or, you know, for me, I'm in a lot of student rentals. So if, you know, say for instance, school doesn't come back by September, you know, am I able to pivot and serve families as well? You know, what portion of my portfolio does this represent? That's really, those questions are really going to help me to understand what it is, what is my staying power? Am I going to be able to adjust? Am I going to be able to still service my debt and not have to just, you know, go ahead and sell off assets at potentially a loss when you might be able to ride it through and eventually down the road experience inflation in a good way, in which case, you know, your loan stays the same and your value of your asset just goes through the roof. That could actually work out really nicely for an investor. So my current approach, I've already touched on this a bit, but I'm diversifying away from student rentals a little bit. I'm still keeping many of my properties, but I did sell one, probably sell one more. I'm going to put some money to work elsewhere. I am looking in Florida right now for some opportunities. I'm going to see what I find down here. Like I said, looking for markets that are made up largely of unimpacted individuals, and then also adding in basic housing to my portfolio more so. So just things that I think can help hedge me against the unknown, what might be coming. And then of course, I like buying commodities, gold, silver. There are also many other metals that would be very valuable to have. And then like I said, I am looking at Florida. I consider that a hedge against government overreach and policy. So if you don't know what your government's doing, you don't necessarily agree, you can actually diversify into a different political climate to help diversify yourself in that way. Definitely something to consider. And I'm even open to considering the investor visa route, you know, being able to make my tax home not in Canada, you know, just depending on what our Canadian government does. If they, you know, if they all of a sudden introduce capital gains tax on the full amount, you know, that may, and they may affect a lot of investors' decisions. So it's great to have options here and to just set yourself up to be able to react. So some resources, certainly my podcast, just search my name on any of the platforms. And I would recommend go right back to the beginning and just go right through. If you're a new investor, I've had so many people reach out to me and say, this made the difference. We bought our first property because of this. You got guys like Shawn that have come on, Corey's been on, you know, so many great guests have been on here to share their story. And that's really what helps you to take action is hearing what worked for other people. So that's why I started that. A couple other things, the Joe Rogan podcast, he had Peter Schiff on, great guy for talking about economics, currency, gold, silver. Sorry if you hear the dog here. So episode 1508, there's another one on YouTube called The Hidden Secrets of Money by Mike Maloney. And I'd highly recommend that. First 4 episodes are just purely awesome. And there's another one if you want to just understand traditional economics a little bit better. It's called How the Economic Machine Works by Ray Dalio, also on YouTube. This is a little bit of a crash course and get you up to speed on some of the things that are going on right now and some of the risks in our market based on our fiat currency and our government's reaction to this crisis. So with that being said, I'm going to open it up to questions. Sorry, that might have gone a little bit long. I never know with monologues. Like I said, not my main preference here. I usually like a dialogue. So anyways, panelists, if you guys want to poke on anything that I said and have me expand on it, just let me know, because I do prefer that. Like, just let me know what you want me to expand on. But I'm going to open up these questions, guys. If you want to enter in a question, there's a Q&A box at the bottom. I will just go ahead and open that up now. So we don't have any questions in there now. I'm going to look at the chat if I can find that. I'm going to end my screen share just so I can see the chat. Okay. Oh, there we go. All right. Okay. So guys, any questions, go ahead and write them in the Q&A. I've never used this Q&A box. So Corey, I don't know if you want to let me know if there's something I need to do to know how this works. Okay. Anonymous attendee, what was your first investment? Okay. So answer live. Okay. Okay, so my first investment was a property in London. Like, it was like $129,000, just like a single family. Not a house I would ever buy again. Didn't structurally like it. It wasn't my ideal property, but that's the whole thing about failing forward and just getting started. Sometimes you just got to start, and it's not perfect, but that's sometimes just the way it goes. So, anyways, hope that was helpful. Okay, so Wilson, when investing in hard assets, are you planning on buying hard real gold or invest in gold stocks? So I think that there's a lot of people who would argue with me on this one, but I actually like the physical gold and silver. But of course, you can get stocks. The thing I worry about with stocks is that theoretically a company could go bankrupt and your stock could become worthless. So it's not to say it's bad to have that, but just understand that there is a risk inherent with every investment. So for me, I like physical, but yeah, that's also an option. And somebody just typed, where do you buy gold from? There's one good place, silvergoldbull.ca. There's also a lot of cities will have places. There's a place in Welland called Coins Unlimited. Okay, where do you see house prices going in southwestern Ontario going? Okay, so house prices in southwestern Ontario, I think that there's a good chance they just go out of reach for the average Canadian. I already see that happening. We could end up in a market where the majority of people are renters. So when I think about that, I like to think about where's the last stand. And I think the last stand is in smaller towns with good infrastructure that are outside of major urban areas. So it's the rock in the pond. I apologize for people who hear me say this a lot, but the ripples flutter out. So you've seen it happen. Toronto was the rock dropped in the pond. Eventually the ripples made it to London. London took off. Things are absolutely insane in London. So I still see opportunities in Corey's market down in Sarnia. I think Windsor is still, even though their values just through the roof, going up through the roof, it's all relative. What can you buy stuff for in these markets relative to, the GTA? And, I see Fort Erie going up. I see a lot of markets like that just going through the roof down the road. Now, there is going to be a normalization. Like eventually, in Hamilton, prices are just going to become too ridiculous for the average person to afford. And then they just keep traveling further. So if you start to think about the psychology of the average person, it'll help you get ideas about where you think people will go next. But I would encourage you to look for infrastructure, look for cities that have long time been established, city sewers, sanitary, water mains, all in place already. And if you can buy at or under or close to the cost of replacement to rebuild those houses, I think naturally, no matter what, just because of affordability and this work from home movement, people are going to go to small towns that are further away than conventionally we would have thought. So, Ansh, the most basic form of housing is usually not in so good areas in the current market. Won't those areas be stressed more in bad times? Yeah, I think that you're in for a rough ride if you want to get into those houses. You have to learn how to manage in those areas, but I still do think that they're primed for the most growth, because eventually when people used to buy the next class up, now they're coming into that neighborhood and they're going to make it better. And we've already seen that happening in Hamilton, if that's what you're referring to. Aaron Takar, sorry if I mispronounced that. What qualifies for basic housing, multifamily with cheap market rents? To answer that question, like what qualifies as cheap housing, I would say focus on there. You can go to I think it's rentals.ca, and you can actually see a breakdown of all the major cities in Canada and what the rents are. I would say look to some of those markets where rents are lower. See if the property values are lower too. If I know I got to spend $2,000 to rent in Toronto, but I might be able to rent for say $1,200 in Chatham, if my job is flexible, or if I'm in service, or if I'm in something that I could work from a remote location, I might actually consider that. So there's no right or wrong answer to that, but definitely look for, compare it to the average Canadian's income, right? I think the average Canadian income is somewhere in like the $65,000 range for a family. I could be totally off on that. What can that afford, right? Look at markets that can actually afford a place to live, and I think that those places have a future. So what's your opinion on Bitcoin and Ethereum? I'm not big on cryptocurrency. I see it as fiat currency, and a lot of people will hate me for that. So I apologize. I'm not your guy when it comes to crypto. I think the technology is fantastic, but it really, in my mind, would need to be backed by a hard asset or a commodity for me to want to get involved with it. So do you have a construction background before you started your construction company? I did not. I knew nothing about construction. I just ended up flipping a couple of properties, doing a couple of burrs, and then within a year, I actually started my construction company. And it was more of that failing forward, and learning what I didn't know, and just taking action. And that's been my approach, and that was my major success factor. Okay, guys, feel free to stop me. Like I do have several more questions here, but if we've got to get on to the next presentation, I can start just typing answers to these. So Jen, just feel free to cut me off when you need to. Okay, so wouldn't basic housing markets be more likely to be subject to stress during difficult economic times? Therefore, wouldn't the medium-priced assets and the units be more valuable in difficult economic times? So wouldn't more medium price? It depends. So don't go off to some mining town that only has one industry. That would be ridiculous. That's not a good plan. I'm talking about markets that are maybe potentially benefiting from the economic circumstances of their neighboring cities. So for instance, I talk about Wyerton, Ontario a lot in my podcast. I like that area. I think, that's within roughly a 2-hour drive to Toronto. I think a lot of people that work in Toronto could remotely live in Wyerton. Small town, typically not a lot going on. Values are still quite low, but it represents an extreme level of affordability in an area that's just starting to get hot. That's a type of market that I like. I like Fort Erie, Port Colborne, because of their proximity to Toronto. They're within that 2-hour drive, and still extremely affordable. But I mean, the cat's out of the bag. You can see what's happening there. I do expect that rock to sort of flutter out, that ripple in the pond. So who knows where it ends? Okay, so I guess I just answered that live. Done. Okay, so what advice would you give to somebody who hasn't invested yet in terms of navigating their market, which seems to have gone bananas? I would say, if you haven't already started investing, now is the time to pick your market fresh. See, you actually are at an advantage, because a lot of people who are already established in one market, they're too complacent. They've already got their team set up. They don't want to look to a new market. So if you haven't started yet, now you get your pick. You can look at Austin Ye. I know Corey, you're Austin's coach, and he gives you a lot of praise. Austin decided that Windsor was the market, even though he lived in Toronto. And after 2 years in it, Corey, he's already quit his job. He retired his job. The guy just went absolutely bananas, just like the market. And he made it happen. Big cash flow, big numbers, really, really impressive guy. So if you have a clean slate, that's an opportunity. It's just about how you look at it. Oh, he's gone to other markets now too. So that's great. Are you including Bitcoin in your mix of assets? I don't think it's bad to invest in some Bitcoin. I just personally wouldn't do it. I think you could make money. I think a lot of people have made a lot of money. It just doesn't meet my fundamentals. Okay, so thanks for the great talk. Do you think house prices will go down? I think house prices could go down in certain areas and in certain pricings. So we've already seen house prices go down in Toronto in the downtown, not houses, but condos. We could see that in others as well. But in the long run, no, I think everything's going up. It's just about weathering that storm. And yeah, we could definitely see a correction, and it could take, 20 years like it did in the 90s. It took 20 years for properties to come back up, inflation adjusted. So it is possible. It has happened in Canada. So we need to be in assets that we're comfortable holding for the long run, assets that cash flow. So I would say absolutely pick markets that have strong cash flow and a good diverse economy, not just one industry. You don't want to just have a town that does nothing but mining, because if that mine shuts down, you're out of business. Randall, okay, so what metrics did you use to decide which property to sell? Return on equity underperforming. What are you doing with the capital now, and can you loan it to me? Randall, I took basically I just kind of started what's furthest from the university. It was actually a really great property. I hated to sell it, but I'm just kind of like working outward in, and I don't know that was the right decision, but it is the decision I made. Normally, I would look at return on equity. That's absolutely what I would do. However, I'm a little emotional about some of my properties and how good I think they are. So even if the ROE isn't quite as good, I just don't want to give up. I don't want to part with them. And maybe that's not the right answer, but can I lend it to you? Maybe. We'll see. But I am looking to put some money to work here, as I said, down here in Florida. Okay, so when mentioning basic housing, what do you mean by this? I think I've gone over this a bit with my previous questions, but basic housing. So see the most basic level, 1 bed, 1 bath apartments, not fancy, not frilly, basically stuff that would be among the lower rent prices in your community. Doesn't have to be rock bottom, but something that the middle and lower class can afford to rent. That's what I mean. Do you think investing in student rentals is a good idea? If you can get it at the right price, it's a good idea. I think that there's still plenty of opportunity in students. I just think that you don't want that to be your entire portfolio right now, knowing that if students don't come back in September, we could be in a pretty hairy position where we maybe need to reposition our asset. So if you're going to buy student rentals now, make sure that your numbers will work to rent to families. So maybe looking at duplex student rentals where you can have an opportunity to get pretty good rents, even if you rent it to families. So I've already talked about Bitcoin. I'm going to just skip that one. So I've always had an interest in investing in multifamily, single-family houses in the USA, Detroit, Buffalo, Rochester, Niagara Falls. For instance, what would you recommend for the first-time international investor to be mindful of? Any tips or trips moving forward? I was thinking about a possible burn in the USA. Don't do that without doing your homework. I've been burned in the US. I've lost a lot of money in the US. So this would be my second go around actually of doing this. I would recommend listening to the podcast, A Canadian Investing in the US. Glenn Sutherland talks all about this. He does this all day long. Definitely find some people who do a lot of that and latch on to the information they have. And then of course, take action when you feel you're ready. And okay, so you mentioned the cost of replacement. Please explain. When I'm talking about cost of replacement, I'm talking about the number the insurance company uses, the rebuild cost on your home. Now, insurance companies usually inflate that, but say I know I can build for $170 or $160 a square foot, and I know the level of finish I can find for that. If I can find houses that are selling and say they're 170 a square foot to buy, but then I'm basically getting the lot for free, I like that a lot. I feel like people are going to go to that market, especially if it's got a diverse economy. I feel like it's just a matter of time before people go there just based on its affordability. Now, that's not a golden rule. That doesn't work every time, but it is a good starting point for a discussion, in my opinion. Thanks for speaking with us today. How quickly do you think Canada adopting universal basic income, if it's implemented, do you settle in Florida? If Canada implements universal basic income, that's very bad for absolutely everybody. It's trickle up poverty. It's socialism in disguise. That would be absolutely not a good thing. Sorry if that's political. I don't censor myself well. I usually say what I think. Hopefully people appreciate that. Some people don't, but it's not a good thing. And yes, I would absolutely be looking to get out of Canada if that happens. So I really hope we can come to our senses about that one. So what made you venture into the construction industry? I never thought I would ever be here. I just got into this because that was where the money was. And I know that's a bad answer, but I was already doing this and I like creating things. And I never knew. I used to like building things out of Lego, and here we are. But I'm not really great with my hands. I can do a couple of things. But I got in. I'm a good problem solver. I'm a curious person. And I think that those things work really well. And I love systems. I love building good teams. And I think all those things just work really well in my business and allowed me to enjoy myself doing this.
Hey, Andrew.
We should wrap it up, shouldn't we?
Yeah, and I'm loving all of the
Yeah.
questions, guys. Like, this is fantastic, and this is the kind of interaction that makes this sort of thing so valuable. So thank you so much for being involved. Maybe, Andrew, I saw one question that I'd like maybe you to answer, and then perhaps the rest of the questions you could just go in and type answers.
Yeah, absolutely. So you tell me, and then I'll type the rest of the answers.
Awesome.
Yeah.
So I saw someone, and I'm sorry, I didn't notice the name, but someone was asking about your thoughts on commercial properties and how they may, do you see that switching over to like changing use to residential or being used in different unique ways? What are your thoughts?
I love repurposing real estate. I specifically love it when people get creative in their solutions. So I think that there's a huge opportunity to take commercial mixed use space and then add in residential units. One of the trades that works for me, he does that all the time in St. Thomas. He'll basically take something that has a storefront and, he'll chop it up into many units and just make astronomical cash flow. So I definitely think that there's opportunity there. A lot of retail stores are going to be hurt by this. So there's an opportunity to buy that stuff at low price because a lot of, it's tragic, but a lot of these businesses are going under. There's going to be a lot of new real estate up for sale in the commercial space, and these cities and municipalities are going to want something to be done with them. So they don't want boarded up stores. So I think what we're going to see naturally is we're probably going to see a lot of retail space shrink. They'll still keep the storefront, but I suspect that municipalities are going to allow stores to convert more space into residential units on the back end.
Awesome. Well, Andrew, that was fantastic. Thank you so much for sharing all of that great information, and your slides were awesome. And of course, the Q&A. So big round of applause for Andrew.
Yeah, thank you. All right, I'll play around in the questions here and in the comments. And yeah, anyone want to send a question, just do it on the same thread here.
Awesome. All right. So
share back the hosting ability there, Andrew.
All right. Who's the host? Am I the host? Are you the host?
Oh, Corey, how do I give you the host back?
Or if you want to just go into participants, pull up Rasna and make her the host, that would be awesome.
Okay, so let's do that. Rasna, more, make host, change host.
All right, Rasna. Rasna, you're now the host. Look at this. Weird. So apparently, for those of you attending, you know what, it wouldn't be an ONREIA meeting without a little bit of technical difficulties. That is not our strong suit whatsoever. So we are recording this. It will be posted to our YouTube channel. So if you know someone who's messaging you saying, I can't get on, it capped out at 100 people, it is sharing to Facebook. I can see that it's live on Facebook, but it accidentally got shared to my personal Facebook page. So it is now sharing on the ONREIA page. I don't know if anyone has realized that, but anyhow, we're going to keep going tonight. And I'm looking forward to, oh yes, Corey, thank you. Corey's so great reminding us what to do here. If you haven't yet, go to YouTube and subscribe to our YouTube channel. It's if you search the Ontario Real Estate Investors Association, you will see it come up. And we do record our meetings every month since we've started using Zoom and doing these virtually. And you'll be able to see that. It usually takes a couple days for us to process it, and it'll get posted there. Also, while you're doing that, or make a little note to also go onto our Facebook page and like and follow our page on Facebook. That is typically where we are posting about our next events, who our speakers are, all that good stuff. So if you can go ahead and do that, that's amazing. And I think Corey's probably putting all that stuff in the chat for me. So thank you so much, Corey. All right, well, I'm excited to introduce our next speaker. And again, I'm going to shift this way so I can read my screen here. Rasna Arora has an awesome story. And honestly, I didn't realize sort of your history until you sent me your bio, Rasna. But I mean, I love it. It's, you know, she came here about 18 years ago, new bride, you know, coming to Canada, looking to start fresh, a new life. And it wasn't the fresh start and the sort of dream life that she thought it would be. And it ended up being quite a few years. And Rasna, I'll let you get more into it, but it ended up being quite a few years of just really tough times. And it wasn't until only 3 years ago that Rasna got involved in real estate investing. She flew to Winnipeg to attend Stefan Arneo's weekend real estate event, which is actually what we also did when we really started diving deeper and committing to real estate investing. And, and 3 short years later, Rasna has exploded her business, you know, has a huge portfolio, has done a ton of flips, and flips all running at the same time. And we know how challenging that is. She's built a team and has done a crazy year in 2020 of growth.
Unbelievable.
During a pandemic. So I'm going to hand it over to Rasna, and she's going to tell us more about her story and really how she's been able to grow her real estate investing to where it is today. So Rasna, why don't you take it away?
Thank you so much, Jen and Shawn, for having me. I see what Corey's doing there. That's, yeah. I can share in love, spread that joy all around. Yes, so I moved here about 18 and a half years ago, and I just got married, came here with Bollywood dreams, you know, of dancing in the snow with your sari flying and all romance in my head and everything. And life is not exactly, you know, the way it is in the movie sometimes. But it was you know, it's not what happens to us, but how we react to our circumstances and situations. So making the best of things. I actually did get into real estate earlier than 3 years ago, but it went on a crazy tangent and grew manifold 3 years ago. Absolutely did. That's true. But I did get into it about 12 and a half years ago or so. And that was also an event that, you know, there something negative happened in my life, and I decided to put my energies into something that was going to be productive. And that's how I started reading, and that's what I would encourage. There's a lot of new investors here watching and listening, and to them I say this, that you know, I took 1 year. Okay, I'll tell you a little bit of, I'll get more personal. Well, it's me, always personal. My whole life is available on social media. So I had a miscarriage in 2007 or so, and we were in Disney in Florida, the happiest place on earth, as they say. And so that happened. And then next day I said, you know, well, I'm Indian, so if I've spent money on something, I'm going to squeeze everything out of it. So we said, no, it's okay. I'm really upset and angry and sad, but we're still going to go and use our tickets tomorrow. And so we went in, and, you know, there were children everywhere and toddlers and such cute, beautiful kids. And I was crying and so upset and heartbroken. But at the same time, I think it was very, again, you know, it's not what happens to you, how, you know, what you do with it, how you take that and react or let that dictate your life. And I think it was very cathartic being in that state, in that place, because I just let it all out. And I was on the roller coasters crying and just letting it all out, you know. And that's when I decided that, you know, instead of getting upset and sad and now taking this path of, you know, being this sorrowful person who's gone through something so tragic, I said, okay, I'm going to put my energy into something else that's going to distract me, but it's going to teach me something. And so over the next few months, I spent days and nights reading everything I could about real estate. So, read everything you can from, I think most of us started by reading Rich Dad, Poor Dad. So my mother had given that to me before, but so I had read it before, but then, it was the right time to read it again, and I did. And then I read lots of books by, I think there was an author called David Bach, who has the Automatic Millionaire Homeowner series. His books are like start late, finish rich, or the terms are similar, automatic homeowner, millionaire, or something. I read every single book that I could, and then I joined a community. At that time was RAIN. 12 years ago, there weren't many Canadian focused groups around, and I did, and that's when I started investing. So I bought some in Barrie and in Ottawa, just simple townhomes, buy them, rent them, and that's it. And then I got comfortable. I said, okay, I bought these homes. I'm so smart. I'm so intelligent. I bought this. I'm all set. And my husband at the time, we were focusing more on his education and everything. So, anyways, long story short, I got comfortable, and that's my point. We have to get comfortable being uncomfortable, because comfort kills creativity and our dreams. I was living in a home where there was a 6-figure income just from one person. I had these 4 properties that I thought, okay, my retired life is set. That's it. I'm just gonna watch Netflix and chill, not in the other chill kind of way, but still, and then later on, this was not working out for me. And that's when I said, okay, I want to do something else with real estate. And I flew to Winnipeg, attended a seminar where something just clicked in my mind. And what clicked was that I didn't have to go through the life that I was stuck in, because I felt stuck in it, that I didn't have an out. Because to get out, I would have to get uncomfortable, and really uncomfortable, because I lived in a mansion, I had a BMW, everything, I had a perfect life on Facebook. But at the end of the day, I was very deeply unhappy and lonely. So anyway, went to see Stefan. Stefan, as he was, minced no words ever with anybody, as you all know. And when I came back from there, I knew that I could do this on my own. And all I had to do was, again, get back into the mode that I was 12 years ago, learn. And the only person that you can actually trust is yourself. So you have to have faith in yourself. And then there's no turning back. Then once you decide that, okay, this is what I want to do, who is the one here that I can find, or who in the world can we find who's done what I want to do and has excelled at it? Go and stalk them, hound them, beg them to coach you, ask them to lead you, and that will save. You can pay in time or you can pay in money. We all have a limited number of years on the planet. We may all think that we're going to cryogenically freeze our bodies and come back to life, but if I don't know when that's going to happen. So let's take what we have right now and invest our some money and learn from people who've done this. And that's kind of where I started learning 3 years ago. I did coaching programs with now what is Black Card University, and I did platinum, like Shawn and Corey did as well. And I think what happened was, it's not just when we are in a coaching program, what we're learning from the material, it's the people we are connecting with. Every time, like your organization in ONREIA, the people who are part of this organization, there are people who are tomorrow's billionaires. Shawn and you 5 years ago would not have imagined where you are right now. Did you think you'd be developed? Maybe you wanted to, but the reality of it, right? And that's why it's so important that people join these groups where people are doing what you wish you could do, because that will get you going. And at the end of the day, it's action that you take. If you're not going to take any action, no amount of coaching, no amount of money thrown on anything is going to help. So you can blame everything, including the weather, COVID, God, meteor falling on the earth and destroying everything. Everything. There's an excuse for everything. But you can turn everything around and find an opportunity. Yes, there is a market that's crazy on fire in Ottawa and Barrie, and I think most towns in Ontario right now. But yet, the truth of the matter is that our growth for our business in the last 12 months has been because of COVID. Because when others were fearful, we were being greedy. Like, Warren Buffett said. And, you have to be open to that. You have to not let fear take over. Feel the fear and do it anyways. And I don't just say this because famous people have said this. I'm really bad at remembering quotes and stuff like that. I say it because we do it, we follow it every single day. So to all the new people, the new investors who are either immigrating to Canada now or thinking of getting in, or are 21 years old and thinking of getting in, there is always a way. Find the right people, ask them how, and yes, everybody is busy, but ask them what do you need to do as a new investor to get that information from them, and then do that. And it can be as simple as we want it to be or as complicated as we want it to be. So right now we're going to be touching 100 units, and mostly what we buy is bungalows, and our model mostly is to convert them into 2 units. So we create secondary dwelling units. We try to find as many properties as we can with more land on these bungalows, so that once the bill in Ontario comes into play to add a 3rd unit or a coach house, we have that option available. Because if we have 50 houses with SDUs, just as soon as that legislation passes, we have the ability to just add 50 more units right away. Of course, again, it sounds easy, but we have that opportunity because we're doing what we are today. And that's the important thing. Start now, find a market that works, numbers that work, and start. The best time to invest was yesterday. The second best is now. I feel like I'm rambling. Okay.
You're not rambling. You're not rambling. Keep going.
Okay. Yeah, it's like a one-way communication. But yeah, I'm very passionate about what we do, and I couldn't do it without Pierre, and he's hiding behind right now. But it's important to have the right team. We could talk forever about real estate. We do with the kids as well. And you can be in any situation, I think, and find a way to do this, is my point. Pierre has 5 daughters. I have a son. I have my parents living with me, seniors. And, so I have Paula and Jake who are listening right now at Tartan Developments. Give them a follow, by the way. And they are they're my students at Blackheart University, and they're doing amazing. They started, we met in June, they came down to Ottawa, and they didn't, and today, now they crossed 11 properties since June. So they're on fire, and they have little kids, they have a baby, they have, kids in diapers. So if they can do it, if I can do it, literally anybody can. So don't let your situation or circumstances dictate whether or not you can get in real estate. There's always a way, or it's up to you to find that way. Also, don't expect things for free, because at the end of the day, every one of us, and when I say free, I don't mean just like a dollar amount. I mean effort, price, time, all of that, because everybody is where they are because of what they've put into it in time, effort, and money. So be cognizant of that and be respectful of that. Otherwise, there are so many people out there who can help get you where you don't even know that you can get to. Where you in your dreams you wish that, oh, maybe one day I would be like Shawn and Jenn sitting in Costa Rica when it's freezing and -43 outside. Well, it can happen. Look at them. Look at Andrew. He's in Florida, and here are Cody and me.
It's a rough life, Rasna. But, hey, listen,
So tough.
Rasna, you've been on fire this year, like just killing it, and it's actually exhausting watching you go because you're buying so much and doing so much. Just a quick question for you, for everybody. Why is it that you chose SDUs as kind of your primary investing strategy lately? Like, what is it that attracted you to that, and why do you continue with that?
And for those who aren't familiar with SDU,
yeah, secondary dwelling unit, right? So it's a great strategy, and it's one that more and more people are going to. But just especially for the new people that are on here that might not know exactly what it is and how to get into it, why is it that you have gone to that strategy?
Okay, so a couple of reasons. One was, we were doing flipping and we did some wholesaling, and we had done a project with an SDU, which here actually, that was the first project he started when this was in the beginning, about 3 years ago, Queensdale. And the most basic reason is that it's better to have 2 rental incomes coming in than 1. Splits the risk, obviously, it increases your cash flow. There's more stuff you can do, with that place. Another thing that was that I like about doing bungalow SDUs or even semis is the fact that it can be used as something that can sell faster than a multi-unit, than a building or something. It would appreciate. From my understanding is limited in the multi, unit. And when I say multi-unit, I mean bigger buildings. In that it's easier and faster to sell. So should something happen in the market, there's always going to be a need for people to, buy a house and live in it. And with the prices of houses going up and up and up, it's going to be something that people will, I believe, find more attractive, to have a beautiful home to live upstairs, and then downstairs it's not that dingy basement unit or an in-law suite. It's a proper, gorgeous, bright, beautiful, 3-bedroom home that we are creating. So it was from that point of view as well that we prefer SDUs. The other, what is going on in the chat? What is Corey up to? I'm going to read that later, Corey. You better be careful. Oh my God. They're talking about me being awake. Yeah, I don't sleep much. Okay. That's Corey distracting. Okay. So, but yeah, and we are, getting into triplexes and fourplexes, and multi-units in that sense now, because just the fact that having more sources of rental income and numbers working is so much better on the number of units increasing. I will never, never say never. Be very careful of buying a single family home which just has one income coming in, one rental income coming in. It makes sense if the house that you buy is so cheap that it's gonna, blow up in appreciation. And that just happened with us actually today. Pierre and I were talking as well. We got an appraisal for a property we bought just last year. It's coming up for term renewal on 1st of March. We bought it for $205,000, a single detached with druggies living there, and it was a tenant that we inherited. It was a bank repo, and then we went in, we negotiated them leaving comfortably, and renovated it, spent about $50,000 or so, and it just got appraised at $420,000. So you have these places that you can find, but again, it's that problems or profits thing. You have to find a problem to fix, and that's where you're going to get the equity, the appreciation. You're not going to be able to get that when you go buy a brand new townhome for $600,000 and rent it for $2,000. That may seem like a safe strategy, but if you're a professional real estate investor, I don't know how. Maybe there are ways, but yeah. So there's always opportunity. And Andrew was mentioning as well, look at outside towns. But again, be prepared that outside towns have people who are, their thinking is a little different from the city. So if you're going to get permits done or anything, it's going to take longer, slower. You might be the one paving the way. But remember, the ones who are pioneers are also the ones who gain the most at the end of the day. So you have to go through pain to get to Costa Rica. That I can tell you.
We've gone through our
I'm sure.
Rasna, we have some pretty good questions coming into the chat. Do you mind if I sort of interview you a little bit?
Yes, of course, absolutely.
So Kim was asking, you had referred to some legislation earlier, and she was just asking what that was about, what you were referring to.
Yes, it was on that. Wait a minute. Are you following me on Instagram, Kim? If you aren't, it's Russ Buys Houses. And every webinar I attend or seminar I attend, I always post, where I am and what I'm watching so that you can follow and learn there as well. And yesterday there was one put up by Luke Warren and his and Andy Tran, who's an expert in SDUs, and your neighbor Brad, who's in Costa Rica right now as well. Bill 108 that was introduced in 2019. Thank you, Pierre. Yeah, that's another thing. Give acknowledge when acknowledgement is due. Gratitude, yes. So that was the bill, and it was adding this whole third unit situation. If you reach out to probably Shawn or Corey can share the details of how they can get that information and watch that video. Probably that was an informative one about that bill 108 to add an additional unit.
Shawn, do you want to share a little bit, because you were on that webinar last night with Luke? Maybe you can share a little bit about what they were talking about, just to give some context.
Yeah, I can sort of give the Coles notes, but basically, just like Rasna was saying, the legislation is about introducing into all municipalities in Ontario the availability of putting a third unit onto the same lot, right? So in the availability of, let's say you've got a single family home and you add in an SDU into the basement like Rasna's been doing, but you also now have the ability to add a third unit. Let's say it's a detached tiny home or a detached, whatever you want to call it, granny suite outside as another third unit. So that's becoming more and more available in different municipalities. Some are adopting it quicker than others. I know, so Brady McDonald was on there last night. He does a ton of them. And he's just down the hill from us here in Costa Rica right now, but he does a ton of them in Barrie.
We could probably yell to him and ask.
Hey, Barrie. So yeah, it was very informative. And that's really what it's all about, the ability to add a third unit basically onto the same lot.
And if you do that, you can probably live like them on a yacht like they did last summer. Hey.
That's right. Uh-oh.
Oh, no.
I mean, what's happening?
So if you guys follow our stories, if you're friends with us, we have had some run-ins with Costa Rican bugs. Last night we had a bat in our villa because we keep the doors wide open because here we're getting sidetracked a bit, but electricity in Costa Rica is extremely expensive. So they only put air conditioning in the bedrooms. So to keep everything cool, you have to keep all the doors open, but that also lets the critters in. So we had a bat in here last night. We had a grasshopper that was about this big, like Jurassic size. It was crazy.
And the scorpion, what was that horrifying creature?
Yeah, Shawn went and was sitting on a table, or not on a table, at a table outside our room, and came back in, and I'm like, what's on your shirt? Did you get like a stain or something? And he looked down, he's like, oh, it's a scorpion. So, we have the nice hot weather, but we also have the the stingy things and the
Yeah.
creepy crawly things and all
Take the
that.
good with the bad.
Where we don't have them in the snow.
Let's focus on.
I know. Sorry.
Oh,
Jan.
sorry. Okay. Yes.
Weird.
Okay. So let me take some questions here. Okay.
Yeah, so I'll introduce you here. Rasna, are you doing SDUs in Ottawa? You already said, yeah. Bungalows go so quick, and usually 100 to 150K over asking. Are there any wholesalers in the Valley, or how are you finding these deals?
Yeah, I have a secret stash of spies that I deploy all over the city. But no, okay. So one thing is building relationships, and that's something, again, you know, as a coach at Blackcard University, I do coaching, and that's something we teach our students as well. How you're going to get that word out there that you're looking for these things in the market, and these are the kind of things you would learn, you know, from your coach or your investor group or things like that. People should know who you are, what you're looking for, and you should be on every wholesaler's list. So and make sure you're joining every Facebook group in your local area, which is geared towards real estate investing, and make sure that you put the word out there that you're looking for this particular kind of product, and, you know, to add you on their list, and you will find that people will start sending you things, and yeah, that's kind of how it goes. But it's not just about seeing something on MLS or seeing something on a wholesale you know, list or anything like that. There's so many other factors to getting a deal, and the right deal. You know, negotiation skills are super essential. And I'm sure you and Corey and everybody who's an experienced full-time real estate investor understands the importance of negotiation. You know, we have to negotiate in every sphere of our life, from our child to make them drink milk, to you know, a wholesaler to ask them to come down to our price, or you know, a seller, or anybody, literally in life. So you have to invest in these skills. And it's not just you know, like when you ask someone that, okay, how do I get this? Or I get a message saying, hey, can you send me, you know, your deal, or can you send me your wholesaler's name? Sure, but it's not gonna get you where you want to be, because you're applying a band-aid solution. If you want to, you have to create a system, you have to follow processes, and, you know, you have to go through this whole learning process. So there's no shortcut. And, you know, even if you get a deal, how do you know it's the right deal if you don't know how to calculate your ARV? If you don't know the right, you know, the appraisers in the market and know what the appraisal will be, what the by ARV for the new investors, it's after repair value. So let's say, for example, I buy something at 400,000. You know, if I'm going to put in 200,000 to create an SDU, that's 600 plus the interest you're going to pay on this. If your after repair value is anything less than a particular amount, you're not going to be able to pull out all your money for the investors and pay them back. Sure, maybe you can do it if you can qualify for a regular mortgage. But then, as we all know, you can't qualify for more than 4 or 5 of them. And then you need OPM, other people's money, or you need capital raising skills, and all of these things are essential to, you know, creating a business around real estate. If you just want to buy 1 or 2 properties, it's different, you know, and it's not hard to do that. And Dan, just to add in and answer your question as well, how much do you typically spend on a conversion? You know, right now it's anywhere between, you know, on a semi-detached, it's about 160 or so, right? Yeah, if there's not much work needed upstairs, to about 200,000 or so on a detached home for an SDU. And this is an average. This is what we have found, whether it's having our own team, maybe, you know, you save some over there, but that's the kind of number. The number of 30,000, 60,000, 70,000 does not exist in Ottawa. So if it may exist in other parts of Ontario, and I don't know how, because I don't know those areas. I know my town and I know my area, and I know rates over here because we've been doing this for 3 years. So going into this and expecting that, okay, you know, that's again something I want to put out there. There's so much to share, sorry. But I see people make these mistakes, and it hurts because at the end of the day, you know, they're trying to create something for their future, but they don't know the full situation. They'll see pictures and videos of us doing this, or you know, other investors, but they don't see the whole picture. So they'll be told by the realtor that, okay, you know what, the basement is finished, there's a kitchen in place as well, you can just put up some fire rating walls and everything, and it's you can get it legalized. That's not how this works. You're going to pretty much have to gut everything down and start again if you want to maximize the space and make sure you're getting your money's worth. So make sure you're talking to the right people. Make sure you're getting the right contractors. Make sure you know how to interview those contractors so that you don't fall into a trap where someone's scamming you. And yeah, Dan, our typical conversion, it takes about, I think we've been luckiest if we have a conversion in 3 months. It is taking an average of 4 to 5 months. Material is harder to get. You know, there are things that like wood, like lumber and appliances and kitchens. Oh my God, kitchens seem to be like toilet paper right now. Everybody's grabbing them. So there is that. But yeah, so plan ahead. You know, if you're doing something, take these delays into account. Maybe hire someone who's done this before and pay them for their time, and you'll save a lot of headache and a lot of loss as well. Yeah.
Absolutely. Good points, Rasna. We had a question come in actually from Facebook. Brady McDonald is watching on Facebook.
Oh my God.
How do you finance your deals? Are they self-financed, JVs? What do you do?
Okay, so we don't do any JVs. All our properties are owned totally by us. And I think Shawn and you follow a similar model as well. I just feel better being responsible for our own projects completely. All our funding is private lending. Is that a scorpion or a locust or a bat? Or dinner? It's a bat. Okay. Yeah. So sorry, Brad. It's all private lending. So our model is, OPM, 100% financed by private lenders, and then renovation loans are done on a promissory loan, depending on how much someone has invested, anywhere from 8 to 12% on average. We're very lucky to have investors who come to us directly, and they reinvest once projects are over. So we try to finish our projects as soon as possible, and as soon as it's done, refi starts, and investors are paid out, and rinse and repeat. So that's how we're doing this. And if things can cash flow at a 10% mortgage, then it's Costa Rica time after that.
Absolutely. Awesome. Okay, I hope that didn't fly in our house. Here's the next one from Paula. Hi, Rasna. Did you find it difficult to create secondary dwelling units in your region, the Armpar Renfrew region? I've been researching in other parts of the valley and finding the townships are not very welcoming of it. Did you experience this, and how did you overcome it?
You are absolutely right, Paula. Like I was mentioning, the opportunities that you go looking for in smaller towns and bedroom communities to bigger cities, you are going to be the path breaker. So you will have to experience the pain that other people have already experienced and are enjoying the benefits of in bigger towns. So yes, we have experienced that. We are experiencing it, and we're fighting with everything that we have. We have a very good team with us of people who how should I say, know how to put it diplomatically when you have to answer to a development information officer or the city, whereas I may just go full on aggressive mode to them that how can you say no, it's part of the bylaw and blah blah blah, and then my designer will be like, oh, maybe we could do it this way, or what do you suggest? And so you need that as well, because you need people to get the job done. So and that's another learning. You must realize that you are not going to know everything, and you should know everything, because your time shouldn't be spent on learning everything there is about the business and how to hammer a nail. I can't do that, by the way, guys. I can't do this whole hammering situation. So you don't need that. You can hire people who are really good at their jobs. Make sure you hire the right people to fight your battles in whatever direction. Your team is essential to your success. So if you're deciding to flip or do an STU or whatever it may be, unless it's for your own knowledge or experience that you want to know how it's done and you're doing it yourself, as a business, please don't expect yourself to be working a $20 job, $20 an hour job, and you could be paying someone else to do that, and you could be working hard to see how you could earn $500 an hour. So focus on that part. But yeah, Paula, we are struggling with that. But if you know anything about me, we don't give up easily. So if you're in a town, we're gonna take over.
That's a promise.
You can fight, but you can't. Yeah, we're not giving up.
Awesome. And that's the mindset you have to have, right? Like, you have to know what you're looking for, know what you're going for, and don't take no for an answer. You find a way around the issue or through the issue. You don't just stop. So I think that's an important point. Here's another question from Betty. What are your thoughts on investing in a townhouse or semi-detached, as they tend to be lower on price for starting out?
At the end of the day, the answer is in the numbers. So find out what the number is for creating that second unit, or if you can, even in a townhouse, if you're just buying it to rent it as is, that's not a strategy I would employ, unless it's, again, for the numbers that I was mentioning, like in a smaller town. I'm not buying a full $500,000 home to just have one renter for even $2,000 a month. That's us. But yes, I would definitely look at those options to create more units, and especially if there's land attached to it. So they don't make more of the land. So I love land.
Absolutely, so do we. Rasna, what do you think about Ottawa's market? Some new build house prices increased by $200,000 in 1 year. How sustainable is it? Is it overpriced? What are your thoughts?
Thanks for your question, Samil. The question, where did it go? It disappeared. I was reading the question. Wait, one second.
Sorry.
That's okay. Let me go back.
Again.
Where is it? Oh, let me just.
It might be under answered.
Yeah, that's okay. That's all right.
I'll read it again too. What do you think about the Ottawa market? Some new build house prices have increased by $200,000 in a year. How sustainable is it? Is it overpriced or not?
It's overpriced for me. If a house that I was buying for $350,000, $400,000 is selling for $600,000, I'm not buying that house, because, like I said again, it's numbers. If the numbers don't work, look for another option. Create another deal. It's not just about something that's available online. You literally have to create deals, and it is possible. When I'm talking to anybody, I make sure that they know what I want, what I'm looking for. I'll give you an example, and this may help other people who are watching, as well as newbies or even experienced investors. So right now, because everything is closed and we're trying to furnish some rentals, my mother is the one who does the decorating of these rentals, and that she enjoys doing that, and it's in-house, and so it's fun. But right now, with everything closed, I have to find things on Facebook Marketplace. So when I connect with someone, and I find that they're a young professional, or whoever they may be, or someone not so young, I always make sure that I mention to them why am I buying this? I'm buying this to furnish a rental. We create rental properties. So if you know someone who needs to sell quickly, or I have a little plug there, and I mentioned to them, just reach out to us, and you can earn a $500 bonus if you just connect us with someone who we end up buying home from. So, people are always interested in knowing what's in it for them. So they'll keep in mind, like right now, who doesn't want to have $500 or $1,000 extra? So, and we did get something that we are buying off market that was just from a comment like this, just mentioning what we're looking for, and that we buy directly. So it's you have to create these deals. It's not just about the market dictating what is on offer. Let someone else make that mistake. Let them increase your ARVs. That's great. I mean, hey, we bought houses for $350 this time last year. They're selling for $600. Yay for us. But don't make that mistake. Or if maybe there is a possibility. If you buy that $600,000 house, think of, is there a way for you to create and make that into a $900,000 or a $1 million house? Is there units you can add somewhere? Is there land behind? Can you tear it down and put up an 18-unit building? Think out of the box, because you need to create deals sometimes. So
that's a great point, Rasna. And that's, I think, one of the reasons why we've been successful, especially with this market, is looking at deals differently, looking at creating them rather than just seeing black and white. Oh, here's a house for sale. Here's how much it is. Does this work? In this environment, most times it won't work. You've got to start thinking a little more creatively, which is where having a coach, having a mentor, having someone who has gone through this process is so valuable, because when you're starting out, a lot of people don't know what it means to create a deal, to think creatively. So that's a great point. I'm going to ask this question that Ansh asked. Rasna, thanks for sharing your story. Do you see a challenge growing and managing a large portfolio of properties that are 2 units per property rather than a multifamily when you're looking back? Which is a great point. It can be a lot of individual properties to oversee. So how do you feel about it?
I feel pretty good about that, because I love delegation. I was mentioning before, we make sure that we hire really good people who are very good at what they do. So our job is not to manage a property. Our job as a business is to create deals and create and add value in our portfolio and keep growing, so that we have work for all these people who have been working with us through a year where everybody's been, so many people have been laid off, and touch wood, our guys have been extra busy, and like they tell us to slow down because they can't get through all the project, but that's a good problem to have. I've lost my train of thought again. What was the point? I knew this would happen.
That's okay. It's all right. You've been on for a while, but that's a great answer. You delegate it out. So
yes, got it. Yes. Thank you. So property management, and that's where, we have a property management company who, Jenn Walton, who handles our properties. And our job is, okay, get the product ready. Okay, Jenn, what do you need? Do you need a furnished one in this area of Ottawa? What is going to make the maximum return on this? If this is a downtown property, do you want it, a professional rental or a family or whatever? And we let them tell us what will work, and we trust their judgment. Later on, we'll assess after 6 months how things are going, and tweak things along and pivot and do all that fun stuff. But it's important to find the right people who can then take over from you, handle that part, and you pay them their fair share. So we pay 5% and a half a month's rent for every year in a rental unit, and they get to grow their business. In fact, in one of the smaller towns, there was no property management company. So I told her, you know what, Jenn, this is an opportunity for you. We're going to go in this place and we're going to go big. So we want someone on our team that we can trust. Do you want to follow us then? She was like, okay, let's go. She expanded her team, and now they're taking care of, I don't know, 20 rentals over there for us. So it takes a similar person like your personality to be able to take, what you're giving them and run with it and create other resources and grow and expand. And everybody wins. If you're gonna have the mentality of, I'm gonna keep everything to myself, I don't want to give this 10% or 5% fee, I want it in my bank account. Well, then you're gonna get the calls about the plugged toilets and the children's toy from somewhere, whatever. I don't want those calls. I'm okay paying the 5%.
I think it's also important to note though too, when you're done with these at the end of the day, it's essentially a brand new product, right? So there really isn't a ton of deferred maintenance off the hop because they're essentially new products, right? Everything's brand new from the studs in. So is it that difficult to manage something like that compared to say something that's got a ton of deferred maintenance? I think you've got a leg up on that as well, right? So
that's true, but I don't want to know anything about the tenants. I like you handle them, they're not paying, you figure it out. I don't want to know. I want to grow my business. I want to learn about real estate, get bigger. I'm not going home, only going bigger. Touch wood.
Knock on wood. So Ranjit asked this question, and you kind of just answered it. Isn't private lending prohibitively expensive? And I'll let you go ahead, but you sort of just answered it.
Yeah. Oh yeah, it's expensive, but not prohibitively. It depends how long you're going to borrow the money. So make sure that you know what it's for, what you're going to do with it. And, if you're creating something with something you borrowed at 10% and you've just doubled something, your portfolio, then how does it matter if you're giving someone 10% or 12% or 14% even? Don't worry about what the other person is making. Worry about what you are creating, what is being added in your, that net asset line. Worry about that and think about how you're going to get there. If real estate investors started thinking about interest rates, oh my God, I have to pay 10% or 7 or 8 or 9 to buy this house. I don't want to do that. Well, then banks are not going to let you buy more than 4 or 5 properties. So you can either be happy with that and be in your comfortable place. One second. Merci beaucoup. Or you can say, okay, I'm going to take this money and I'm going to create something that I didn't have before with money that I didn't have before, and then pay them back as soon as it's done. Refi, pay it back. They're happy. They made money. You created something. Let's do it again.
Absolutely. And I think because there are so many newer investors joining us on tonight's call, a first step when it comes to learning about real estate investing might not even be anything to do with real estate. The first step might be just
mindset,
your mindset, and learning more about how to have an abundance mindset, because that is going to be the key to doing anything and being successful in really anything, in any job or any endeavor you take on, but especially with real estate investing.
That's so true. And that also stems from the fact who we are surrounding ourselves with. We surround ourselves with people who we are comfortable with. So they're usually either someone as in the same place as us, or usually a little lower, because we want to feel good about ourselves as a human race. But that's not going to help you grow. So you need to get out of a place where you're the one who knows the least in the room, who's the dumbest one in the room, and learn from every single one who's a person who's much better. Be in that room. Seek out rooms where you're the least knowledgeable one, and just soak it all in.
Absolutely. Fantastic. We have a couple more questions. I know we're kind of getting on into the night, but this is going really well here. So a couple more questions here. Mark. Hey, Mark. Mark, just a follow-up question to Brady's question. Are you holding the mortgages after refi personally? And how do you scale mortgages on residential? Mortgage limits is what partially led me to commercial residential.
Mm-hmm. So part of that is having brokers who understand your long-term plan. So when you're going to, I know Mark is an experienced investor, but others who are not, it's one thing. Sorry, I read another question. I get sidetracked. Oh, my apologies. But yeah, it's 1 second. Let me go back to the question. Yes. So the brokers that you've spoken to, or the broker, your one person who knows what your strategy is, and you've sat down and you've discussed the strategy of your next 5-year plan, or let's say not even 5-year, 1 year or 2-year plan, and tell them this is what I want. I want to have 50 properties. How are we going to do this? And then they will come up with something for you. Okay, you know what? So for example, right now we buy properties, we have different companies, and under each company you have a similar set of properties. And then those properties, now they're going to do small business banking and then get a blanket mortgage for all of them. And then, so I let them figure it out and let them kind of lead the way, because again, they're the professionals in this. So the way we think is that if these are cash flowing at 10%, anything that happens after that is amazing. So I'm not really right now at this point concerned more about, the next refi is 5% or 4.5%, because I know that it's going to be only better. And then when the final happens, because when you have a newer company, it's going to be different than you have a 3 or 4 year company, because you need your tax returns, right? So there's a lot of things at play, and with accountants and your broker. But my sincere advice is to sit down in the beginning of your journey, or in the middle, or whenever, with your broker of choice, and tell them your plan, your strategy, and let them give you the ideas. And if it's not working in your favor, then find a new one. Find someone else. And again, that comes back to the circle you're in. The people around you who've done this, ask them who they use, because they've already done that homework and felt that pain already. So they'll connect you with someone. If they don't find that, then someone else will connect you. But ask, yeah, that's what I would.
Great point. To be honest, the real estate investor network, the circle, isn't that large, really, when you think of it. It's pretty tight knit, and I'd say 99% of the people that we've connected with are in this they're completely open. They're willing to share information. They're willing to help you out, because they have that abundance mindset. It's not, I got to keep all my cards hidden because I'm afraid you're going to take what I have. We know that there's more than enough out there to go around. So ask questions, start growing your network, and, don't be afraid to ask other people. That was a great point. Yeah. Gabriel's asking, Rasna, during your background story, you mentioned that you went to an education program. What was it? And Susan, I'll just link that into her question is, who do you recommend for a coach?
Well, there are 3 coaches right now on this call itself. So I do coach, and I do coach for Blackguard University, which is the educational institution that Stefan Arnio created, that follows his systems and his processes. And that's what Shawn and Corey and I are graduates of. We did the platinum programs. And that was a stepping stone to our future successes, because it pushed us. It held us accountable. Many of our partners did not like our coach. I know Peter did not get along with Stefan, and that's fine. As long as one of you do, and you understand that you are there to, again, soak everything in, soak the knowledge, and then apply it. That's the important part. So I do coaching through Blackguard University, and they just sent me a nice hat today, so I will wear it. Anyways, so yeah, we do have bronze, which is a 3-month course, and it goes up to a platinum course, which is 12 months, depending on what kind of education you want, how many properties you would like to be guided through, and all that fun stuff. But find a coach. It doesn't obviously have to be me. I take very limited number of students because we are extremely busy. So I try not to have more than 10 students at a time. But find the person that you connect with. Cody's a great coach as well. And I don't know, is Shawn doing? Does he have time right now? Not yet, right? Yeah. Okay. All right, I'll take your references, no problem. But yeah, I am careful about who I do take on as a student as well, because it's not, I don't want someone who just wants to say, oh, okay, now I've paid this amazing amount of crazy amount of money. Now make me rich. That's not how this works. I'm your guide. I will help you through it as a good coach will. And you're teaching them how to fish. You're not giving them the fish. So that's an important thing as well. I think Dan, he's also on the call, who he was also a Stefan Arnier student. So yeah, we do miss him, and we miss his crazy speeches, and but his brain was genius, and what he created is amazing. So I'm glad that I'm able to help continue that legacy. Right now, Damon Woodward is leading the company, and he's doing a really good job. And if he didn't, I would not be with them. Trust me. So I have faith in him and what they're doing. And yeah. So yeah, Blackheart U is the one. Or if you are interested, feel free to message me on Facebook, Rasna's Houses, or just Rasna Arora, and I'd be happy to answer your questions over there as well.
Awesome. Yeah, Stefan was definitely one of a kind, and that
Yep.
he was the catalyst for us, really, that took off the trajectory of our business. He has some fantastic books. So
Yes.
if you haven't read, I'm a blank right now. Money People Deal. Yes, that is a phenomenal book. So
why don't we do a giveaway?
Sure, we can do that.
Okay, so I have 2 books, and they were signed by him when he was here last December 2019 for my own full day session, which we do as a coach with Blackheart as well. So I'm trying to hoard the ones that he signed and not give them away. But for the first time on this show, I will show. Look at me, we're on TV. I'd be happy to give this, because you know what, it can help you get started and change your mindset in a direction that you may not have thought possible, and that can lead you to down the road to financial success.
Amazing. Okay, well, what we'll do then is I get sent a list of all the people who have attended. So we'll just do sort of a random draw. And you want me to message you and let you know who it was, and we'll connect with you people, whoever wins.
That's amazing.
Thank you so much, Rasna.
No
That's
problem.
awesome.
Do you want me to answer any more questions? I see there's a few. There's Jamie.
There's a couple more. Let's finish up a couple more here. And then,
how do you increase your capacity for getting more mortgages, more and more mortgages? Okay. There is no dearth of money in this market. Let me be very clear. It's how you have access to it. Who knows that you need that money? So that's where skills like capital raising come into play. Things like branding come into play. What are you doing on social media? Do people know you? Do they know what you do? Your credibility is huge. So as long as you're a person of your word, things go wrong a lot in real estate. Timelines don't get met. COVID happened, this and this happened, contractor ran away with money. Things will happen. But the important thing is communicate. Keep your communication open with your private lenders and find a solution, because this is not a one play thing. This is a long-term play. Relationships are what is going to keep your business growing. I've invested personally with Shawn on his projects, and I had never met him. And it's the credibility and the openness and everything else that comes into play. And I remember I just wired you like 140,000 or something. I don't even remember the first time. And my mom was like, "You don't know this person." I was like, "It's okay. I know he's all right. It's gonna be fine." So that's important. And I have that with other people. We both share a common lender who was following me, and I didn't know that. And now he's investing so much with us. So money is out there. Don't think there's a dearth of that. Find the deal. Create your team so that you have people, and the money will come. So yeah.
That's a great point, Rasna. And for those of you who are just getting started, I mean, it's easy for you to say, "Oh, well, you guys do all these deals," and here's the thing though, we didn't always. You have to start somewhere. So like Rasna has been saying that for the entire hour, let people know what you're doing. Let people know what you're interested in and what you're looking for, what your needs are. Start documenting. And I don't mean, to sound nerdy, but the more, and you would say this as well, the more you can get on social and just show up consistently on social media, whether that be Instagram, Facebook, whatever your preferred, platform is, just start, if you're going to look at a property, talk about it, do a quick live or do a video that you're going to upload later, put it in your stories, because the more people start to see what you're doing, the more interest it creates. And then more and more people, it's insane how many people have now reached out to us. And I'm sure Rasna, the same thing happens to you, where, like you said, we've never met them, but they've followed us for a year, 2 years, who knows how long. Yeah. And because we've proven ourselves over and over in showing up, talking about the deals that we've done, we've established that we know what we're doing and established that trust without even having met someone. So, I just want to kind of
people, they don't invest. They're not necessarily investing in a deal. They're investing in you. So if they know that you will find a way to solve any problems that come your way, they'll invest with you. And, by being transparent and open, you're only building your credibility, and then admitting when you're wrong, because you are going to be wrong. There are going to, there are things that are going to happen that are not in your control. But again, it's not what happens to you, it's how you react and how you handle that situation that's going to be important. So your character is very important, I feel. And, I have my parents living with me. So my mother, every day when I come downstairs, after telling me, of course, that I should do something to my, like look decent or look good or dress up or something, don't look like a contractor. The one thing she always tells me is stay grounded, don't let things get to your head. I know you're doing so well, beta, but just remember who you are. And I'm like, Mom, I don't think I can forget, and I don't think you let me forget. So I'm fine, don't worry. But thanks for reminding me. And that's important. It's important to stay grounded. Important to remember why we're doing it. If not for the people around us, then who else, right?
Absolutely. Great point. Okay, I think it is now almost 9 o'clock, so I think we're going to wrap it up. But wanted to say, Rasna, thank you so much for joining us tonight.
Thank you for having me.
It was so great to hear you, talk about your story and the growth that you've sort of gone through. And
it's amazing.
I think you made a really great point in that, the comfort level, you kind of stalled out and had to reassess, like, is this where I want to be, or do I need to do something different? And it's especially hard to do when you are in that comfort zone, right? You said you had the big house, you had the good things, but you weren't happy.
Beautiful house. Seriously, stop it. It was what do you call it? A prison? It was a gilded cage. A gilded cage, he says.
It's true. And that's right. It probably was, right? On the outside, it looked like a beautiful house, but on the inside, it felt awful. So you made some phenomenal points, some very wise points tonight. So thank you so much for sharing your wisdom. There were some more questions. I'm sorry we couldn't get to them tonight, but we are going to wrap things up. And luckily, there's no more wildlife around us. But before you leave, a couple questions or a couple asks I have of you. One is, go onto our Facebook page. Do us a favor, go on there, like our page, the Ontario Real Estate Investors Association. Make sure you follow it as well. Sometimes you can like something and it kind of disappears. So make sure you click the little button that says follow first. And that way you'll be able to be notified when our next event is, who our speakers are. And since you're all on here still, I will let you know when it is. And actually, I won't tell you who our speakers are. I'm going to keep that under wraps for another week or so. But our next event will be really easy to remember because it's exactly a month away. So we're going to have it on Wednesday, March the 10th. We have some people saying, spill the details. Okay, I will tell you, I'll tell you our topics. And then I'll tell you who our speakers are. So next month we have, we're going to go into the weeds a little bit. We're going to talk about taxes, some things that you're going to need to know. And we're going to talk about planning for your death, which sounds really morbid, but it's an important topic for investors. You know, as you start growing your portfolio, as you start, you know, choosing these different strategies, start thinking ahead. You know, how are you setting up your business for when that time does come, because it will come, and let's just be real about it, right? So those are our topics for next month, and we have some great speakers lined up. You're going to know who they are, so you might be able to imagine. Okay, so from there, guys, follow ONREIA on our Facebook page. Go follow Raz Buys Houses. Go follow Andrew Hines and check out his podcast. And go check out Corey McKinnon. He's been so great to be helping us with the tech stuff on here.
Thank you, Corey.
Thank you, Corey. And hey, while you're at it, why don't you follow Shawn as well? You know, he does some things in real estate every once in a while. So actually, we had a lot of flippers or people interested in learning how to flip houses sign up for this. So perhaps next month, I'll have you do a little snippet on.
Maybe we'll see.
On flipping. We'll see. But anyhow, that's it for tonight, guys. Thank you so much. We're going to sign off from Costa Rica.
Have a good night, everybody.
Enjoy home. Walk on the beach.
We will do that.
We're dodging grasshoppers.
Bye.
Hey, everybody. Thanks for hosting,
Good night.
guys.
Thanks so much, guys. Take care.
guys.
Thank you.